So first of all, a huge thank you to No Cash for the invite to the event. Can we just get the slides going? Okay, now we go. Sorry, slides not working. A huge thank you to get the invite to the event and to also be one of the key sponsors of the event today. It's a great privilege to be here. It's fantastic to actually be in person with many of you. I know there's many more online. So very, very appreciated to be here. So Infosys Finacle is one of the top 10 software and services vendors in the world. The Finacle banking platform covers core banking for both retail and corporate banks. It covers payments and it covers digital banking. We exist and we have customers in over 100 countries around the world, and we do everything from large, core bank transformations to digital enablement. Currently count around 15 new startup banks as well on the books, and counting as we move forward. And I run Finacle for Europe, so it's great, as I said, to be here. So we're looking today at banking transformation for the next normal and what kind of things banks need to be thinking about operationally and functionally to help transform into this so-called post-pandemic world. And fingers crossed we are entering in a post-pandemic world, although lots of places in Europe are still struggling with the challenges. And today's presentation is kind of based on a couple of research reports that we've done in the market, looking at how banks need to think, and particularly incumbent banks need to think about what they do around digital transformation to continue to be competitive and continue to stay ahead of the game. So if we look back at what's happening in banking over the last 10 years, which everyone in the room and online will be aware of, there's a whole different set of forces that have really influenced and impacted banks in terms of how they're operating. Obviously, the economics of a low interest rate environment is particularly challenging to the incumbent banks. Now, with the advent of, or the threat of rising inflation, maybe that will start to change, but it certainly significantly impacted the banks in their profitability and the drivers for change. In terms of the competition, we all know that there's been a fintech explosion over the last decade of non-banks and even non-financial institutions who are also taking market share, delivering customer journeys and delivering customer interactions in a much more agile and successful way. This morning we've talked about open banking and also the way that open banking has influenced what banks have to do from a regulatory perspective, pricing limits, capital adequacy, all of which influence how banks have to react in the market. And open banking in particular really is opening up the core banks to more competition just through regulation. As we stand here today, there's many different political factors going on in different geographies around the world. I don't intend to particularly broach that subject. And obviously we're very aware of the technological changes, the move to cloud, the open API infrastructure, as well as blockchain, which was just discussed. And finally, there's the social element. And social is being driven by you and I. It's being driven by the fact that there is an expectation out there of what an interaction with a bank should look like. And all of these things have significantly accelerated the pace of change. In our view, this pace of change has probably never been this fast, and yet, given where we are in the process and the technology evolution, it will never be this slow again. If we look back over the last 20 years, the whole way the customer journey has been migrated has fundamentally changed. If we go back to the early 2000s, more than 50% of all transactions were done physically, whether that be in the bank, with a wealth manager, a payment, a check, et cetera, et cetera. What we've seen in the last decade is a move where more than 95% of those standard transactions have effectively moved online and become digitized. And what we've really seen, I think, under the hood is it's a digitization of an analog process. But nonetheless, we're all now used to, as customers of banks, particularly on the retail side, more work to do on the corporate side of digitization of our interaction with the banks. We think that the real change here is that actually, in the future, more than 50% of transactions with your bank might be through third-party digital channels. So the evolution of the banking ecosystem, and somebody was talking earlier about the platformification of banking, means that I'm not always going to interact with my bank in order to do a financial transaction. To give you a couple of examples, so in India, for example, there is a global unified payments interface called UPI, and in September of this year, the UPI interface transacted somewhere in the region of 3.6 billion transactions in the month, which is a phenomenal amount. But also what's more interesting is the fact that over 90% of those transactions were done by non-banks. These three players here, PhonePe, Google Pay, and Paytm, excuse me, actually took 90% of those transactions, and none of them are traditional banks. So in one of the reports that we've commissioned and done in conjunction with EFMA, so the European Financial Management Organization, Authority, sorry, in one of the pieces of work that we had commissioned was having banks look at how they see themselves as an innovator and where they will be by 2025. And this survey was taken across 1,000 of the top 1,000 ranked global banks in the world. And the interesting outcome is that even the banks are not seeing themselves as the primary innovators in the market. The number one respondent was obviously in the leading technology companies, Apple, we've already seen Apple Pay, Google Pay, etc. The encroachment of the large digital e-commerce organizations into finance, as well as obviously the fintech startups. And actually incumbent financial institutions are only ranked 5th in what this innovation could look like over the next 4 to 5 years. And so banks really now have to think about what it is that they're going to do to remain competitive. And we believe that this all comes back to looking at the actual business model itself. In this self-assessment survey, these top 1,000 banks also looked at, where they see themselves in the landscape, which is probably even more challenging in terms of the results. So only 9% of the top 1,000 banks globally see themselves as a pioneer in innovation and digital transformation. And if you look at the numbers here, actually more than 50% of the banks surveyed see themselves as either a standard mainstream player or even in the category of laggard, which if we look at banks as their previous existing position almost as a monopolistic entity, gives them a great deal of challenge in order to stay relevant and continue to drive profits and continue to drive margins. And it's margins that are under pressure. Again, if we look backwards for a little while and we look at cost-income ratio in the early 2000s, most banks were operating in a position of 50 to 60% operating margin. Over the last decade, that's fundamentally changed. Of the top 1,000 banks that we surveyed, only the average, of the cost-income ratios is now below 50%. And we believe that the trend for the cost-income ratio position is banks will have to be in the 30 to 40% ratio just to remain competitive. And the startups and the neobanks and the digital banks only are even more aggressive than that. We have a customer called Liv, which is part of Emirates NBD Group, whose operating margin's at 20%. That means they can offer products more cheaply, they're more agile, and they can really take market share. They've already taken over 1 million customers in their market. And again, if we continue to look at the data, whilst all banks have been doing some level of digital transformation, we've all seen it on our phones, the actual pace and scale of transformation is considered to be much less than the ambition was and the outcome is. So again, only 7% of the banks that we surveyed believe that they've achieved their outset goals from a digital transformation perspective, where they've deployed at scale and delivering as desired. Most people, almost half of the percent of the surveys, saw themselves as partially deployed, not going at pace, and but delivering some level of value. And so again, as banks think about the next period as we come out of the pandemic, then what is it that they're going to be able to do and have to think about in order to maintain their primary position? Sorry, a build slide. So, we all know that from pre to post-COVID, there's been this massive push to generate new sources of income. We've really seen that with our customers. We've really seen that in the market. And And we've also seen a transformation and transformation programs driving around what we call digital-first journeys. A particular notice for our customers and our prospects has been the desire to be able to do digital-first journeys around onboarding, around both from a customer and a lending perspective, to be able to sell digitally, and to be able to engage and service their customers digitally. New sources of income, I'll come back to, but the biggest challenge we think is kind of around business model reimagination, which is, can a bank survive if it just continues to be a bank providing core banking services? And this idea that business model transformation is actually the next wave of digital is where we think banks and financial services incumbents need to progress. They have to be able to address this shrinking profitability problem that I've already highlighted, and they have to be able to reduce that total cost of ownership in order to impact their return on investment and their cost-income ratios. So our view is, and the data kind of starts to push to this, is, and the successful models show that banks need to take a much more holistic view of the business model transformation as much as they look at digital transformation. And as I said, if we look back over the last 10 years around digital transformation, a lot of that has been, in many cases, for many banks, has been digitizing existing analog processes. And if banks can focus on the transformation of the business model, then we believe that the future is a lot brighter than it might currently appear to be. The banking business model has evolved that we've all seen from traditional analog banking. There's not many people do that these days, although I have to tell you, just recently I was having to pay for my daughter's student accommodation for the next year, and the landlord said, please, can you give me 12 post-dated checks? I said, my bank doesn't even give me checks anymore, so we need to move on with that one. We've moved to digitized banking, which is digitization of the existing analog processes that I've mentioned, and we have a number of truly digital banks out there now, whether it be the Revoluts, the N26s, and the like. But moving into this digital business ecosystem is actually where we think, talking to banks and doing these surveys is where the banks really need to progress to in order to continue to drive growth and success. And one of the ways to do that is to rebundle and relook at the banking value stream in terms of how to think about what it is I'm providing to my customers from a service perspective, as well as a product perspective, as well as what is the context of that customer. So if we look at the bottom left, banks have traditionally sold self-created products in self-created markets, and they will continue to do so. What we're now starting to see, and what banks need to really be thinking about, is how can I sell complementary partner products, and how can I sell joint products? So to give you some examples, recently in the UK has been announced a lifetime mortgage between one of the banks and an insurer, so the insurer being the underwriter for that lifetime mortgage. This is a brand new product to that market, but a combination of two different vendors. And what they're doing is offering a fixed interest rate for life, which is fundamentally changing how people might think about buying property and getting mortgages, certainly within the UK environment. And for anyone who knows the UK well, we're obsessed with property prices and mortgages, just a daily part of life and what we talk about over dinner. We can then see banks branching into non-financial products and even potentially competing third-party products as you match up what the service is given to banks in the customer context. So again, a couple of examples in my own experience. My bank starts to offer me, which I think is fairly commonplace, starting to offer travel insurance that I can get as a premier customer of that bank. More recently, they've offered me newspaper subscription. They've offered me newspaper subscription at a lower price than what I pay for newspaper subscription today. I don't know who's making any money on that, but the point is they're becoming a lifestyle type vendor. What happens to this then is banks need to push the model that they're taking from a product and a manufacturing perspective up into what you might call a financial services marketplace. And this is where a bank can really become a financial partner rather than a utility. Provide customer insights, which has already been discussed this morning. Personalization, I saw Personetics on the call earlier. Personetics is another partner of Finacle, as well as contextual offerings. And contextual means what am I doing in my life in order to be successful. And then the banks need to be looking at, what do I deliver from a bank, how I go to market. Again, the bank's own channels are not going to go away, and banks will continue to sell on social, on mobile, and online in their own channels. But how can I deliver to an API-led distribution? How do I open my products up and my services up to a much broader opportunity base or customer base than my own incumbent customers, which is where 90% of the revenues come from at the moment? So looking at third-party applications, fintechs, and other industry partnerships will enable banks to really sort of fundamentally think about what is the business model that they're trying to drive to and what are the services that they're offering. And what we see as we look at through these reports, and a lot of this later work has been done with a company that we partnered with called 11FS, is looking at, okay, what are the business model archetypes that banks need to be thinking about in order to retain and gain customers? And we see across the top here, the customer context is very key. So whether it be shopping, transport, home, health, wealth, or even in the business sector, what is the customer context that I'm trying to deliver? So to give you another sort of real-world example from Western Europe, not the UK this time, we have a customer that's entirely revamping what we would all probably traditionally call in the room their digital mortgage process. However, they've kind of really gone back to brass tacks and thought, well, what is it that the customer wants from a context perspective? And the customer wants to buy a home. Nobody wakes up in the morning thinking, I must get myself a mortgage today. People want to buy a house or a home, how we want to categorize it. So their entire business model and the way they're focusing resources, technology, market, and product is all to look at how do I create an environment where a customer can own a home. And it pervades the whole bank in terms of the program, their attitude to the market, and what they're looking to do in order to drive that customer interaction. And what you see from that is that they deliver embedded journeys that are not just their own journeys. So yes, they're going to hopefully drive the kind of utility of providing a mortgage. They're going to provide a finance marketplace where the other products can be enabled, but they're also going to provide the services that help a person get from, well, moving house, obviously, but also owning a home. And it's a fundamentally different mindset that they're thinking from a business perspective versus saying, I'm trying to sell a mortgage. And if banks can get along this paradigm, we think that that will provide them with a much stronger case to maintain their premier presence in the industry. And there's kind of an inflection point in many countries at the moment. If we look, for example, in the UK, again, sorry, I have to speak from experience, a lot of the new digital banks, there were many new banking licenses given out in the late 10s and early teens. But most of those banks are A, not yet profitable, and B, only a secondary account. So more than 85% of people who have an account with one of these neobanks is only just using it as a secondary account. So in owning the customer, the banks still have a primary position. The question is, can they capitalize on that? So again, from a kind of looking at the data that's coming in and talking to these banks, what we see is that we see sort of business model archetypes that are coming out of the data and coming out of how banks need to be thinking about their futures. So we all know there's a digital-only bank element, and we've also started to see more and more of incumbent banks building digital-only banks to the side because it avoids the challenges that they have with existing platforms, existing process, and technology debt. Banks could become a digital financial advisor. So the technology, the data, AI, et cetera, gives banks the opportunity to provide wealth management to the masses without having to get as many, wealth managers as there are customers. So it really provides a different thought about how they run their business model. There will still be banks, if we look at the bottom right here, that will be a banking utility, that their reason for being is that they believe they have the ability to provide the best products at the lowest cost model. And again, in our own experience here, we're working with exactly one of those banks at the moment who are in the process of building a brand new bank, but building a brand new bank which will focus entirely on being an industry utility because they can believe they can do it faster, better, cheaper, and there's more market share that they can take from the other incumbent banks who are still providing these kind of capabilities in their own way. And as I said, you know, we've done this report in association with LMFS, and I can't go through all of these in terms of timeframes today, but what we are doing and what the kind of open offer here is that we're doing sort of CXO workshops to really help banks think about and understand how they're going to drive these fundamental business model changes rather than just continuing to digitize analog processes. And achieving this transformation requires action across the three key dimensions. First of all, we've talked a little bit about what is the target model, what is the customer segment, what is the value proposition. And all that banks need to really have a very proactive and strategic thought on, rather than how do I necessarily remain competitive on traditional services. So what is the business model? What is the segment I'm after? How am I going to operate to differentiate myself? At the bottom, we've got obviously the rapid creation and delivery of value. And people of various banks are in different positions, in my experience here, as to whether they're delivering on an agile method or a traditional waterfall method. But how am I delivering that innovation into the channel, into CX, and into the ecosystem? But we think most importantly, banks need to really fundamentally shift how they think about their own organization. What we see is that for incumbents, the existing banking structures don't necessarily help them move quickly down the value chain. So whether it be the hierarchy of the organization, whether it be risk and compliance in the organization, it can be to do with a regulator, it can even be to do with budget cycles. And if banks continue to act on that sort of yearly cycle where they're just going into budget for next year in order to approve the outcome of a budget, then they will continue to be in this sort of laggard position of how they think about investing. And we really think that banks have to fundamentally change or enable the way that their organization is delivering the digital transformation and align that to what they see as the business transformation that they're trying to achieve. And if we look at this, they've got to move from this sort of hierarchical centralized governance position. So in the kind of gray box on the left, I don't know if it's fully readable, but what you tend to see and what historically banks have done is a high degree of productivity in delivering some project, a long period of governance in order to be able to get to the next stage, another bubble of effectiveness, and then long periods of inactivity while the governance works. And that works on that kind of traditional waterfall governance risk compliance method. The truly agile banks need to move where they're productive all the time. And this is one of the advantages that the startups and the neobanks and the fintechs have, is that they don't have necessarily the rigidity of the governance. And what the core banks need to do is, incumbent banks, is really try and squash that time in terms of how productive they are and how often. And this really comes down to, empowered and multidisciplinary teams. Can they make decisions? Can they enact the outcome? And what is the risk I'm prepared to take? And if we can take that into the new business model world, then there's much more chance of these banks driving success compared to the traditional model and the challenges that every bank, and I'm sure those of you in the room, foresee with trying to move from the legacy world to the truly empowered digital business model. To give you a few examples of this that are kind of working on from our customers' perspective, I'll pick on Marcus, Paytm, and Liv, which I've already mentioned. So Marcus decided, Marcus is part of Goldman Sachs, which has been probably the most famous investment bank in the world for as long as anyone can remember, right? And they decided a couple of things. They would go into a new business model in terms of they were going to go into retail banking. They were going to do it as a partner ecosystem. And they were also going to do it as a digital-only entity. And really, they set up an entire different structure around that initiative in order to drive the success. And they've delivered banking as a service. They work with Amazon. Apple Pay, or the Apple Card, I should say, sort of sits on that kind of platform. So they really fundamentally changed how they do business in a completely new business model compared to thinking about how do I get better at investment banking. And they've been very successful at it. Their customer acquisition in the first 18 months in the UK was way beyond any of its competitors in the same period. Paytm is based in India, and it offers a kind of true marketplace for financial transactions, and already gained over 25% market share because of the open banking transaction. And as I said earlier, the volume of payments that goes through them as a sort of digital wallet is truly astonishing in terms of the volumes that they've gained already. And then we have Liv, which is kind of what might be becoming a classic example of a bank, an existing bank, which is Emirates NDB, creating a bank on the side, if you like. So they've created a lifestyle bank in order to drive the fastest growing market and also become the fastest growing bank in the region, where they're driving into the youth banking. Am I being told to hurry up here? Yeah, okay, 2 more minutes. Who are operating at less than 20% cost income ratio. So, truly transformational activities by existing players as well as absolute new players. And it is fundamental in the psyche of how they've thought about the business model and how they've enabled teams. From a Finacle perspective, we truly believe that we have the ability to help banks deliver this in order to scale digital leadership and transformation. So I've talked about the full suite of products. It's cloud native. It's all composable, so you can start to pick up the different parts of Finacle in order to deliver Finacle platforms. And we've seen, the reference examples show this. With many flexible deployment options, whether it's cloud or SaaS or the traditional on-premise, and moving into this agile world. And I'm going quickly now because I'm being looked at. Independent analysts have rated Finacle as best in class in many categories across core banking, corporate banking, as well as digital, and as well as payments, which isn't actually on the slide. And I think most importantly, what Finacle clients have seen is kind of remarkable success in terms of hitting the numbers that we talked about before. So when we survey these clients and we look at the data, we can see, on average, a 33% increase in return on asset, 19% capital returns, and driving that cost-to-income ratio lower. And we always have to come back to that. We're a technology company, but we have to come back to what is it that the benefit that the client is trying to get to in their business transformation. There are more stats around that, which I'm going to skip past, and I'm just going to come to a conclusion. So many thanks again for allowing me here today to support you and sponsor the event. My details are there if anyone wants to get in contact. Happy to talk around the room, and enjoy the rest of your day. Thank you.